Welcome to the Explainer. Today we're going to dive into a really powerful technique that the pros use to protect their investments. It's called a pre-mortem, and yeah, it's a pretty wild idea. To succeed more often, you actually need to get really good at imagining failure. So let's get right into it.
Think about it for a second. We spend hours, maybe even days, planning for our investments to go right. But how much time do we spend planning for them to go wrong? Almost none, right? And that right there is one of the biggest, most dangerous blind spots in all of investing. Today, we're going to fix that. So here's our game plan. First, we'll nail down exactly what this blind spot is. Then, we're going to unpack the pre-mortem technique itself. After that, we'll learn how to spot these classic investment killers, and finally, we'll put it all together to build a complete defense system for your portfolio.
You see, the real problem is kind of hardwired into our brains. We're just natural optimists. We're always focused on the upside, on what could go right. Now, that's great for getting out of bed in the morning, but when it comes to investing, it leaves us totally exposed to the kinds of massive losses we just never see coming.
So, what's the antidote to all this dangerous optimism? Well, it's a powerful mental exercise called a pre-mortem. Think about it. A post-mortem happens after a disaster. We're going to flip that completely on its head and do the analysis before we even invest a single dollar. So here's exactly how it works. You literally imagine it's, say, a year from now, and that investment you were so excited about has totally crashed and burned. It's a spectacular failure. And then you ask yourself one simple question: what went wrong? This little act of looking backward from a fake future is incredible. It just completely shatters your biases and forces you to see all the risks you were probably ignoring.
And this, right here, gets to the heart of the mental shift. You see, with traditional planning, you're basically just looking for proof that you're right. You're confirming your own beliefs. A pre-mortem does the exact opposite. It forces you, it makes you, challenge all your assumptions by asking that one simple, really tough question. What could possibly go wrong?
Okay, so this sounds interesting, but how do you actually do it? Well, it's not about just randomly worrying about things. It's a structured process. So let's walk through the 5-step framework that turns this from a cool idea into a plan you can really use. It's actually a really logical flow when you see it laid out. First, you set the scene, imagine the failure, just to get your mind open. Then, you brainstorm every possible reason for that failure. After that, you've got to assess those risks, because let's be real, you can't fight every battle. And finally, for the biggest threats you've identified, you figure out the warning signs and build out specific what-if plans.
Okay, theory is great, but let's make this concrete. Let's imagine we decided to put a big chunk of our portfolio into this hypothetical company. We'll call it XYZ Tech. And now, a year or two later, we've lost most of our money. Ouch. So, let's do our pre-mortem.
All right, this is step 2, the brainstorm, and we're not holding anything back here. Could their main product just get totally disrupted by AI? What if they lose that one huge client that makes up 40% of their business? Could a new law come out and make their whole business model illegal? What about a huge scandal or a data breach? Just getting these potential disasters down on paper is the first step to actually dealing with them.
Now, a big brainstorm list can feel pretty chaotic. So step 3 is all about bringing some order to that chaos. For each risk you came up with, you just give it a simple score for its probability and its potential impact. This simple little matrix immediately starts to separate the really critical threats, like losing a key customer, from all the lower-level noise. It tells you exactly where you need to focus your energy. Now, to help with that brainstorming step, it's super useful to have a sort of checklist of the usual suspects, the most common ways investments tend to fail. These are the classic investment killers that just show up over and over again.
And here they are, the Big 6. Is the company's core business at risk of becoming a blockbuster in a Netflix world? Is the management team just making terrible decisions? Or worse, are they caught up in scandals? Is the company basically drowning in debt? Are there big legal or regulatory clouds hanging over them? Could a recession just completely derail their plans? Or, maybe they just can't execute on their promises. This right here, this is your mental checklist.
So at this point, we've identified and we've prioritized the biggest risks. But look, that's only half the battle. And analysis is totally useless if you don't have an action plan. So now, we've got to build our defense system.
Your first layer of defense is prevention. This stuff happens before a problem even has a chance to start. We're talking about the basics, not putting all your eggs in one basket, diversification, focusing on high-quality companies to begin with, and making sure no single investment is so big that it can wipe you out if it goes south. This is your foundation.
Okay, your second layer is early detection. This is all about setting up tripwires. For those high-priority risks we identified earlier, what are the early warning signs? You can set up news alerts for them. You can review key metrics every quarter. You can watch how the company's doing compared to its competitors. The whole goal here is to see the smoke before the fire really gets going.
And your final layer of defense is damage control. This is your in case of emergency break glass plan. You have to ask, what specific event will trigger you to sell this thing? Having predefined exit rules, like a stop loss, takes all the emotion out of the decision and lets you act decisively when a problem really starts to blow up.
And this is really where it all comes together. You create these simple if-then protocols for your biggest risks. If this specific thing happens, then I will do that specific thing. See, this isn't some vague idea in your head. It's a pre-written script that lets you act rationally instead of emotionally when a crisis hits.
And this all brings us to this really cool paradox at the heart of the pre-mortem. I mean, it feels pessimistic, right? To sit around thinking about failure. But the outcome is the exact opposite. Because by systematically imagining what could go wrong, you end up building stronger defenses and making smarter decisions from the very start. Ironically, the act of imagining failure is one of the best ways to actually prevent it.
So I'll just leave you with this one question to think about. Are you just planning to succeed, crossing your fingers and hoping for the best? Or are you planning not to fail? Because the difference between those two mindsets, well, that could be the difference between reaching your goals and suffering a loss that you never, ever saw coming. Thanks for watching.